United Breweries because that reported a double-digit revenue growth in a seasonally weak quarter. Profit after tax, though, was impacted by an exceptional loss. Vivek Gupta, Managing Director and CEO, is now with us on the show. First, if you could talk about the Telangana issue. What was the price hike in Telangana and how much does it impact the operational performance by you, according to your initial estimates?
Yeah, good morning and thank you for having me. I think Telangana, yes, as you know, 2 days back, we have got a price increase of 15%. Unfortunately, the consumer price has also gone up more than 15%. So we will have to actually see the impact of how much that impacts the volume. But based on our initial estimate, this can actually impact our gross profit by almost 100 basis points. But we actually want to, as I said, we are here to be category maker versus category taker. So we definitely need to reinvest, in Telangana to really make sure the affordability for the consumers is there and we can really drive further premiumization there. So, but I do expect, 80 to 90 basis point impact on our gross margins.
Well, talking about Telangana itself, which comes around 15 to 17% of your volumes, it's a timely hike coming ahead of the season. If you could give us a sense of this 15% hike, if you have done any initial estimate, how much could be the negative impact of volumes be, and as a result of which, the impact on the net realization?
Look, I think from an overall perspective, I would say that, it has been extremely difficult for us because we always wanted to serve the consumers there. And even with the 15% price increase, the cost structure is still not very, very structurally competitive in Telangana. Having said that, I would think the consumer impact is going to be slightly on the higher side because there's a 30 rupees increase in the price of bottle. But we have to see because there is always a balance between what is the real demand in Telangana versus the capacities available. We have always operated our plants at the full capacity and there was always a shortage of supplies because the demand was higher than what we could actually supply. So we will have to see the correction. It's too early to say, how consumer react to it. I think, a manageable 10-15 rupees price increase, we have the data on how much elasticity would be. It is very difficult for me to predict, but we will be actually tracking it very regularly to come back maybe by next quarter, how much impact we have seen because of the consumer pricing. Right now, we are assuming that we would be able to meet the demand and utilize our full capacities.
Okay. What about the receivables, Vivek? What is the current outstanding and how much have you received since the issue started?
Look, I think we have been getting regular payments from September onwards, and that is what the government has shared. We still have an outstanding, almost 80% of the outstanding what it was there, in December. So we have made some progress and we have, I think government and the Telangana Corporation has assured us that over the next few months, we will be getting the old outstanding on a regular basis. But the issue has actually moved in the right direction and our outstanding has been reducing, not at the speed we want, but it has been reducing over the last 2 months.
What is the exact outstanding amount right now?
Because we have old outstanding dues and we have a regular business dues of the 45 days. I don't have the exact number, but it is in the range of around 600 crores.
600 crores. Now let's get to the quarter. Now the quarter was challenging, but your premium products did extremely well. 8% overall volume growth is what you've got. How much of this do you think is on account of the new excise policy in Andhra, and how much of it was organic?
No, first of all, I'm very, very pleased with the performance in the Q3, because as you know, in many parts of the country, we had very strong winters this time and delayed winters as well. And also the affordability is becoming a major issue on beer, like states like West Bengal, where the beer has become very expensive and it is really impacting category. The uncertainty in Karnataka around the excise policy during the last quarter where the category was declining. All of this, despite all these factors, our volume grew 8%, our premium grew 33%, and we actually grew market share nationally in the country. So I'm very, very pleased with the performance. Even if I take Andhra and TN out, our volume growth is 8%. So it's a very broad-based growth. I was reviewing the data by region, north, east, west, south. We grew volumes in all the regions. We grew volume in almost 80% of the states. As I mentioned, a couple of states where the affordability became an issue and excise policy reduction like Karnataka and West Bengal, we declined. But most of the other states, we registered a growth. So it was a very, very broad-based business. On your question on Andhra, we are seeing a good growth on Andhra, but we invested a lot in Andhra in making sure our brewery there, we invest in repair and maintenance so we can prepare for the season because the volumes are picking up, but we had to invest in making sure our plant can produce more beer. And hopefully from this month, we will actually see an increase in our production in the plants because of the investments we put during the last quarter in Andhra Pradesh as well. So on your question, I would say, the growth is very broad-based. Andhra did have an impact, but even if I would take Andhra and Tamil Nadu out, we are still at 8% volume growth nationally.
Right. So double-digit volume growth has been your target. How long before you can reach that double-digit target?
Look, I think we are very excited, with our revenue growth of double-digit. I think the big challenge on the beer is affordability. In the last 3 months, most of the state governments have been increasing duties on beer, and the price of beer is becoming expensive for the consumer. And that is one of the things we are really observing and working with the regulators to really bring the data to them that, beer is what we really want to drive the category growth. It is right for the moderation. It is right for the social connections. So how much that price elasticity will do is something to be observed. But we are actually geared up to at least prepare for a double-digit growth in the coming season.
Okay. Now with raw material prices expected to be stable with agri output, etc., and increased premiumization, what is your margin target going forward?
Yeah, I think a couple of things. I think first is we are still dealing with a lot of volatility. I think one based on what's happening in US and the dollar impact is going to have on things like importing of cans, importing of some of the materials. So there is. I won't agree that the commodity prices are very stable. I think it's very volatile, and there's a lot of uncertainty around that. Second is to drive the growth. We are actually putting a lot of new bottles in the system. As you know that we actually get almost 70% recycled bottle. But as we are growing the business, we are launching new brands. We are investing in premiumization. And we have a big premiumization agenda where we would really like to further accelerate our growth on premium brands in the coming season, which means we'll be putting a lot of new bottles into it. The third is we continue to invest in category growth because we continuously need to make sure that consumer understand and beer is available. The new stores are going to get expanded in UP, and we are going to make sure we are servicing those stores. So I would say that we will be gradually increasing our gross margins. You will not see big spikes in the gross margins, but we'll definitely working on a plan where we continuously improve our structural profitability.
You spoke about the gross margins. Do you have any EBITDA margin targets?
No, we do have EBITDA margin target. Year to date, we are, around 7.7% on EBITDA. We want to get, in a couple of years closer to 10%. But we will, as I said, we have to be the category maker. We have to get the fundamentals right. We need to continue to accelerate the growth. I'm very pleased that for the full year in 2024, our premium business has grown 34%. And it has actually quadrupled to do that. We want to further accelerate this growth. We brought the new innovation of Amstel Grande in few states. We are going to expand it into other states. And at the same time, affordability is a challenge. So in Karnataka, we decided not to take the price increase of Kingfisher, our lead legendary brand, despite the duty increase, which was a big call. But we wanted to make sure that consumers, they love their brand and they don't switch out of the category. So as I said, that affordability is the biggest challenge, and there will be volatility. So we do have a target and aspiration. But at minimum, we'll continuously to make a very positive progress on both the margins and EBIT.
Got that. On the premium part, if you could give us a sense, what is the contribution of premium right now in your overall mix? And with the kind of growth that we're seeing there, higher than the category growth, what could the number go up to, increase to? What is the aspiration here?
Yeah, sure. I'll answer in a different order. I think Heineken, absolutely. We actually grew Heineken by 61% in the last quarter. And the markets where we have Heineken and Heineken Silver, we continue to grow penetration and continue to grow share. Consumer love Heineken Silver. And we are actually looking at how do we expand the capacity. We made an announcement yesterday that we are going to actually invest in our greenfield brewery. Maybe after 10 to 12 years, UBL is actually investing in a new brewery of its own. And we are going to produce Heineken there locally as well. So very buoyant on Heineken brand. Amstel Grande, we launched in 2 states of Maharashtra and West Bengal. Our initial results are fantastic. We are almost getting 40 to 45% repeat rates. And remember, we launched it in slightly off season and we are getting into the season. The distribution is really picking up. The consumer feedback on the product is outstanding. We are actually registering the product in a couple of other states, like Karnataka, to expand, and in Uttar Pradesh as well, to really expand Amstel Grande at some point of time. So extremely positive on the initial response, but of course we have to do more work in a dark market to still build awareness about the brand. On the overall premiumization, look, it's still a very small part of our business. But the good part is we are actually growing shares on premium versus our competitors in the market, and we're also growing the market. So we have actually moved the needle. We are almost now 20 share on premium of the premium segment, but it is still 7 to 8% of our total business. Our aspiration is premium has to be around 15% of our business in the next 3 to 4 years, and that's why we are actually not even happy with the 34% growth we are getting. We want to double this growth rate with the expansions we have over quarters to come.
Thank you so much, Mr. Gupta, for joining us, giving us a sense of how Q3 panned out, the outlook as far as FY26 is concerned. Remember, United Breweries holding very strong in a market that's very, very weak. But with that, it's a wrap on this edition of Trading Hour. Stay tuned. Halftime Report is up next.